Welcome to this week's Gig Harbor Market Recap, Friday the 13th, the super lucky edition. So I'm glad you're here. Thanks for making it. We're going to be covering the CPI today. January really doesn't have a lot of news coming out for real estate, so I thought, well, the CPI just came out. Let's talk about it and see what it means for the housing market. I like to keep things short. I'm not going to go through the entire CPI report. You can do that to yourself. I linked it in my email. I can also link it to the description below. Actually, yeah, I'll do that. And that way you can go through and look at all the numbers if you so choose. But the 5 things that I'll be covering today are the major changes in consumer items, shelter and its impact on the CPI read. What else can we cover? The expected upcoming decline in shelter. You'll know what I mean in a few minutes. And then speculation of the February FOMC meeting and the 0.25 or the 25 basis points hike that the market is expecting. And then, of course, looking at the CPI and comparing it to what happened in the 1970s to the 1980s and gauging where we are on that trend line. So with that, let's get started. Let's take a quick look at some of the major ticket items here on the CPI report. I'm going to pull it up here. Here we go. So these are going to be from the Table 2 Consumer Price Index for all urban consumers. I'll link this in the description below. And we're just going to, this is my email on the left, so if you're wondering what this is, basically I was just pulling out the big ticket items and kind of condensing it for my email readers. And here we go. Let's look at food at home. This is for the whole year. So this is December 2021 to December 2022. And so in the whole year, all items are up 6.5%. That is our inflation. And that's when you hear the 6.5% CPI report, that's what it is. We can see here then food at home has gone up 11.8% versus food away, gone up 8.3%. Eggs, everybody knows, kind of a running joke at this point, is up over the year, almost 60%. Gasoline, all types, this is all premium and just regular, down 1.5%. Energy, so this is both natural gas and electric, is up 15.6%. New cars and trucks are up almost 6%. And used cars and trucks are down almost 9%. Pets and pets products are up 12.5%. And then airline fares, this is a huge one, was up 28.5%. Okay, now let's look at what happened from the month of November to December. So what we had is all items were actually down by a smidge, by 0.1% on the monthly. If you want to take the annualized, you just multiply that by 12. So we got down 1.2% on an annualized basis. Food at home, 0.2%, as you can see, up 0.2%. Food away was up even more. Eggs in 1 month went up 11.1% in inflation. Gas was down pretty significantly here at negative 9.4%. Energy still ticking up 1.5%. New cars and trucks 0.1. Used cars and trucks down negative 2.5%. Pets and pets products largely unchanged, and then airline fares are coming down at negative 3.1%. Again, these are monthly rates, so if you want to, again, annualize times 12, and then they're a little bit more significant. Okay, now we're going to go into shelter. I like to look at shelter here separately because this is a real estate update, and shelter does have a large weight when you look at how much it makes up of the CPI, so it's important to look at it separately and what kind of impact it's having in our economy. Here, let's go to the table real quick and look at what's happening to shelter. We're gonna scroll down. Let's just type in shelter here. Let's go down. Okay, shelter. As you can see, it's almost 33% of the CPI, and over the year, from December to December, it's gone up 7.5%. This month, here we can see October, November, and December, and this is important. So for December, we're up 0.8%. And 0.8% has pretty significantly contributed to the core CPI. So let me read this from the actual BLS, what they released. So they said the index for all items, less food and energy, so this is the core CPI, rose 5.7% over the past 12 months. The shelter index increased 7.5% over the last year, that's what we just looked at, accounting for more than half of the total increase in all items less food and energy. So shelter made up a huge portion of that inflation that the core CPI experienced. Okay, let's go back to the table where I mentioned October and November. So previously, we were actually experiencing disinflation from 0.8 or 0.7 to 0.6. So we were declining, and all of a sudden, boom, December rolls along, and we're actually worsening in inflation. And in itself, that is a bad thing. We don't want to have inflation keep raising prices up. But what's good is because shelter is a lagging index for the CPI, and this does not reflect our current market trends. And so yes, we can annualize this and multiply 0.8 by 12%, which gives us an annualized inflation of 9.6%, which is pretty big. We would expect, prices to keep on inflating by almost 10% over the next year. However, again, our housing prices are declining and even stabilizing. So we can expect this number going in the future. So the next CPI reports come February and March. I think this number will be down significantly. And as a result, I think the whole CPI in itself, because as we just read, the shelter makes up half of the increase, and that will be down significantly as well, the CPI, at least the core CPI is going to be down. And which is an interesting tidbit, because we are, as I mentioned in the last update, that we are kind of tracking the 1970s inflation style. And I like to bring that up right now. Okay, I pulled up a graph from inflation today versus from the 70s to the 80s, and it forecasted out here, as you can see on the bottom, the years, the upcoming years. And if we say, okay, let's do the 6.5%, and this is an older graph, and we go over here, do 2022 December, we can see that we're right on target. So our current inflation is tracking the 1970s inflation pretty well. And while nobody can forecast the future, and history does not repeat itself, but it rhymes, we can just extrapolate just what could possibly happen. And we should prepare ourselves for that. So yes, inflation is declining, but it's not to say that it's over. And we can actually see inflation continuing above that 2% of the Fed target, for the next 2 years before actually the Fed wins its war on inflation. And then of course, what's going to happen is they're going to lower interest rates, and that's going to spur the economy, and then it's going to heat up the economy, and it's going to be inflation. So that is a high likelihood that can happen again. So what does the declining CPI mean going forward? Well, we can't really forecast that far in advance. I mean, Goldman Sachs and all these other giants do forecast it, and they expect rates to go down. But what we really have is what the market anticipates here, and not just really one large bank. So right now, for the next month, the FOMC meeting is expected to have here we see a probability of 66% chance that we're going to have 0.25% increase in rates, and a 34% chance that we're going to just have a Fed pause, which is interesting because a Fed pause means that the Fed thinks that they're winning and they want to kind of slow down, because they've been pushing on the gas pretty hard here, raising rates. So that's both are a strong likelihood that that's what the Fed could do here coming forward in February. Other than that, the decreasing inflation means that we'll probably have interest rates coming back down, which means mortgage rates are probably going to decline as well, and that means we'll probably not have more drawdown in the housing market unless there's a really supply-demand imbalance. So right now, I think just housing prices will start leveling off here as we go further into the year. And so, yeah, that's pretty much it. Thanks for tuning in. Wish you a happy Friday, and have a good weekend. I completely forgot last week, so I almost forgot this week too. But I want to go over what's happening in Gig Harbor. I like to go take a look what Zillow has. Let me just reset all the filters so you know how I set up my search criteria. Okay, here we go. Every real estate agent loves Zillow. So that's why I'm using them. No, it's because I like the interface. It's much better than the Northwest MLS interface. Okay, here we see a lot of things for sale, right? Well, that's why we like to check some of these parameters. We're going to take off new construction. We're also going to turn on pending, so we know what's happening in the market. We're going to leave price, beds, and baths the same. We're going to take off everything besides houses, because we don't want manufactured or land. And then those distort the numbers, and so do condos. And then we're going to look at any days on Zillow we're going to do for the past week. I like to look at what's happened in the week. All right, so we have 10 houses that got listed for sale, of which 8 remain. So that means 2 went pending. So, that's pretty good. That means somebody who was selling their house got under contract within a week. And currently we're at, I think, oh yeah, here it says 31 days typically. So those houses were priced right and there was something in the, find the right buyer. But we can look at what houses sold and kind of learn from them if you're a seller. Here we go. Let's do pending again. And the pending ones were this $600,000 house, 3-bed, 3-bath, split level, on 3 acres, which is a lot. So that's, pretty decent. It's a convenient location. It's 2,500 square feet, $240 per square foot, which is pretty good. What else do we? Yeah, we can see what's happened to the Zillow forecasting here. We got a high in May of or April of 750. Now we're down to 600, so you can see how much prices have fallen since the high. What else? I think that's it for this house. I mean, it's got a dated kitchen, but looks like it's presented pretty well inside. Old windows. So yeah, it needs a tune-up. All right, what else sold? I think it was this one. I think this south area is getting more desirable as traffic is getting backed up more. These houses here on this side of the Key Peninsula are cheaper because of the fact that traffic, I think, is so horrendous on the Purdy Bridge. Something to note is when you're looking at these, yes, there are houses that are still reasonably priced, but you have to deal with traffic and a little bit more driving. But this is the other one that went pending. It's pending inspection, which is good to see. It's on 0.3 acres. I think the price per square foot is a little high, but there you go. Somebody said it was fine. 3-car, let's see, 1,800 square feet, a little smaller for this price that I think. 4-bed, okay, that's decent. 3-bath. Okay, well, 6 days on Zillow, so yeah, that was priced right. Interesting, it got sold a year ago. So, interesting to see. Yeah, let's see. Neighborhood. Interesting. That one sold for $583 2 years ago. Now it's probably worth $662. Yeah, I think this one's a little high, but whoever plunked the cash down, well, got it. Anyway, that's really it for the market. Yeah, as you can see, it's pretty slow. January, only 10 listings in a week. Be nice to see a lot more, but of course it is the slow season, so we'll see what's going to happen here in the spring. I'm real interested to see if sellers are going to be motivated or everyone's going to be sitting on their hands waiting for interest rates to go down. All right, I think that's it. We can look at the... I like to look at the most expensive home and then also the cheapest. The most expensive is, I think, overpriced. I think it's this one here. Let's see, it's 5,000 square foot, 3-bed. It's a little small for a $1.5 million house. Bedroom count. I think it's probably worth 1.2. I think it's overpriced, but I like seeing pink. If I see pink, it means it's going to be a slow seller, and usually as an investor, you like having to fix houses with paint. It's a real cheap option. But other than that, what do we have? And the cheapest house, I think, is over in KP, out by the lakes here. 1978, had an interior refresh as part of the Lake Holiday Association. Okay. 400, 3-bed, 1-bath, 1,500 square feet. It's a decent price. Again, you have to deal with a bridge, but if it saves you money and you like living out there, well then, perfect. Anyway, that's it for this week's market happenings.